Hello everybody, this is Vijay Bambani here and I welcome you into our third video edition of the weekly market outlook newsletter, which we popularly call the Mott's Musings. I begin this presentation with a roundup which you will see on your screen, and the first thing that strikes you is that both headline indices, the Nifty 50 and the Bank Nifty, have witnessed losses. And the Nifty fell 1.27% on a week-on-week basis. Bank Nifty fell 1.31% on a week-on-week basis. Gold fell 0.53%. Silver on the MCX surrendered 1.92%. Crude oil rose 1.18%. Natural gas rose 2.18%. Both these happen to be negatives, by the way, for our markets because they are inflationary in nature. The USD INR, which is the US dollar versus the rupee, appreciated by 0.24%, which is another negative because emerging markets and developing countries' economies get a little pressurized by a strong dollar. The 10-year benchmark yield fell to 5.92% from 5.95% last week, which tells you that there's flight to safety. And banks are basically opting to run into the safe haven of government guaranteed bonds. The market-wide position limits rose 6.21% on a base effect basis, and that basically tells you that the traders are still very convinced about the market position. At least their expectation remains strong. As you can see on your screen, the MWPL chart tells you that traders have slowly but surely continued to ramp up their exposure in the market. Now, this will be a trigger for higher volatility going ahead, because any kind of price adversity or extreme volatility and traders will start to surrender their position in panic, which are already built up to this extent, and that triggers two-way price movements. On the volumes front, you will see that both the indices have fallen with higher volumes, as the chart on your screen tells you. And as far as the basis is concerned, which is the futures difference from the cash market prices where the indices are concerned, both the indices have witnessed basis compression, or the difference between the future and cash narrowing down because selling was seen at higher levels. Now, the moot point is, will the bears tighten their grip on the market? The MWPL will be one of the few indicators to let you know. Watch this space very keenly in the coming week. I now move to the bond market, wherein we gauge the 10-year benchmark yield, which fell to 5.92%, as I already mentioned. And this is because banks were resorting to flight to safety. As you would have seen on the chart on your screen, the 10-year benchmark bond yield is below its 3-month and 12-month average, and falling bond yields are basically negative for equities. Now, this is another factor that you'll have to watch out for in the coming days. Let's now move and have a very brief look at the Dixie, which is the US dollar index, a global basket of currencies. It rose on 3 out of 5 trading sessions, but managed to gain only 0.67% on a week-on-week basis. And last week, I advocated a range between 94.45 and 91.65, which held perfectly well. And this time around, the US elections are not really seeing the routine bullish impact on the Dixie, which is actually rising very, very slowly. Do remember that a very strong Dixie is negative for emerging markets and developing markets, which include India, and any significant rise in the Dixie might impact a negative impact on the Nifty as well as the Bank Nifty. Now, I move to the Bank Nifty. Now, last week, we saw the Bank Nifty fall to number 3, where going on the volatility list is concerned. This is something that I put up on my social media accounts every evening, and you may feel free to connect with me on social media and watch these figures on a day-to-day basis. In the week prior, the Bank Nifty was number 2, and last week it was number 3. So it's not that the volatility on the Bank Nifty has fallen, it's just that volatility in the stocks has risen a little higher than the bank Nifty. The range that I advocated last week was 25,450 on the upside and 22,250 on the downside, which held. And like the Nifty 50, this index too has witnessed a sharp fall on Thursday, which was 15th of October 2020, but it recovered. As you can see on your screen, the price remains above its 25-day moving average, as you can see. And unlike the Nifty 50, this index did not go past the peak made, a previous significant peak made on 31st August 2020 at the 25,232 level. As a matter of fact, the more recent swing high, which is on 12th of October 2020 at 24,190, which must be overcome first before the bulls can be taken seriously. This is marked by a circle and an arrow in the chart, which you can see on your screen. So the coming week's range for the Bank Nifty will be between 25,100 on the upside and 21,975 on the downside. Here again, I would want you to stay light because the volatility is likely to be extremely high going forward, and it is better to trade on smaller exposure rather than risk a substantial portion of your capital. I now come to you, bring to you the analysis of the Nifty. In the week prior to last week, it was number 6, but last week Nifty rose to number 7 on the most volatile list, which again is not to say that the Nifty saw reduction in volatility, but it's just that stocks got a little more volatile than the Nifty 50. The benchmark index lost 1.27% on a week-on-week basis. The fall was on high volumes. Now, this is a reminder of what happened on 31st of August 2020 when the indices fell sharply, but they recovered briefly as they did also on the 16th of October, which is Friday. They recovered after falling very sharply on Thursday. But there is some concern in my mind on the Nifty 50 because the fall of 15th of October was sizable enough to negate all the gains made in the week. And also note how the absolute value of the index may be up, but the RSI is indicating a lower top. In technical parlance, this is called negative divergence and maybe a warning of a fresh decline in the offing. It is a probability, not a guarantee, that the markets might decline. Remember, we talk of probabilities. The bullish conviction may be put to test next week because the bulls will need to try extra hard to push indices higher, and the expected range is likely to be between 12,200 on the upside and 11,300 on the downside. Here again, I would advise you to stay light, trade on very light exposure. Watch the 25-day period moving average, which you are seeing on your screen. As long as the Nifty is above that, the bulls might just be able to hold on to their initiative. Now coming to the last segment of this weekend's video, I have segregated 5 high beta, high impetus stocks for trading, which means you will basically take a smaller exposure and wait for bigger price moves to capitalize on these. Number 1 high beta stock is Tata Chem. Number 2 is Reliance Industries. Number 3 United Phosphorus. Number 4 Sun TV. Number 5 Exide Industries. On the other hand, traders who would want to trade low beta, low impetus stocks wherein you take a larger exposure but play on smaller price moves have the following stocks, which I have segregated as per our statistical data model. Number 1, IndusInd Bank. Number 2, TCS. Number 3, Hindustan Unilever. Number 4, Asian Paints. Number 5, HDFC Limited. For direction, which way to trade these 5 high beta and 5 low beta counters, you will have to monitor your computer trading terminal screen. I'm not giving you the direction here because that might change hour to hour. I'm just telling you how to play small exposure with large price moves, and which stocks to take for large exposure and smaller price moves. So this brings me to the end of this weekend's presentation. Coming up on your screen are my social media contact coordinates. I would love it if you would connect with me and keep in touch with me via the social network, wherein I keep putting up updates every day. I hope this video has been helpful to you and gives you some clarity on what to expect from the markets next week. Vijay Bambwani signing off for now. If you liked what you saw in this video, do help me reach out to your friends and family by referring my video to them. Thank you. Goodbye for now. See you next week. Thank you for watching.